I'm Carol Cohn, and welcome to Purpose 360, the podcast that unlocks the power of purpose to ignite business and social impact. In today's podcast of Purpose 360, I explore the premise where you bank really matters. Joining me in an intriguing conversation is Charley Cummings, CEO of Walden Mutual Bank, located in Concord, New Hampshire. Founded in 2022, Walden is the first FDIC-approved U.S. mutual bank to become chartered in 50 years. The digital bank offers impact-driven savings accounts while supporting lending to make a positive and lasting change to local food ecosystems in New England and surrounding states. What makes Walden Bank different? As a mutual bank, they are governed by its community, funded by investors with a bias towards the long term, and significant local impact. Simply put, you can grow your savings at a bank that directly supports local food production, from farms to manufacturers, value-added processors, distributors, and consumer brands, and you can feel really good how your money is working. Welcome to the show, Charley.
Thanks so much for having me, Carol.
Oh, it's my pleasure. I always love to find innovative entrepreneurs that are very socially engaged and share them with our listeners who are all over the world. And so this is going to be a great conversation. So just a little bit about your background before you started Walden Mutual Bank.
Sure. Well, let me go way back. So I grew up on Cape Cod in Brewster, a little town on Cape Cod Bay. And back in the early 2000s, there was a proposal to put a wind farm in Nantucket Sound, offshore wind farm. This was the first proposed offshore wind farm in the country. And so I helped to start and for a long time served on the board of an organization called Clean Power Now, which was an advocacy group formed in favor of this project because some local opposition sprung up, the Kennedy family amongst them, basically saying, well, we're for wind energy, but just not here, not in our backyard.
That's a big NIMBY issue.
Indeed. That's where I learned the definition of the word, or the acronym NIMBY. And I found that really hard to stomach because it felt like the alternative was a coal plant in someone else's backyard. And it really quite literally was. And that was really interesting work. I went back and I got a business degree and spent some time with a number of different venture-backed companies in the clean technology realm. And eventually started my own company called Walden Local, which is a brand of pasture-based meat here in the Northeast. One of the original impetuses of that business was just the idea that there's this amazing set of farmers that seem to produce products that are demonstrably better from a taste, health, nutrition, environmental standpoint. And there's a set of consumers that want access to those products, but it wasn't as if they could plug into the existing infrastructure. And so it was in building the supply chain of that business that it became clear, because we were lending to all of our partner farms, that there was a gap in the existing lending infrastructure that seemed to be missing these folks. And at the same time, recognized that banking was a place that really lacked compelling consumer brands. You know, you think of the bank brands out there, they don't have the same brand love and affinity that you see in other categories like clothing and cosmetics and food. And even more so, there weren't a lot of bank brands that had anything interesting to say about social and environmental impact. And so those sort of became the two sides of the bank balance sheet, as we want to raise deposits from individuals and businesses that wanted to align their deposits with a set of impacts and values they wanted to see in the world. And on the other side of the balance sheet, lend to businesses across the entirety of the food value chain, from growers to distributors to brands, but also things on the periphery of that ecosystem that more broadly touch natural resources in important ways like energy, waste, etc. So very excited to say we got the banking charter over the finish line in late 22, and we opened to the public in the beginning of 23. And so
You're very young. On your website, you say that initially you raised $24 million from 230 community, you call them investors. So were those investors? Were those depositors? I mean, were they just general consumers? What was the makeup of the people that said, I'm going to bet on this guy?
well, they weren't just betting on me. At that point, they were betting on a pretty well established team of folks from inside and outside of banking. And I think that's another important ingredient here. Is I think that's true of a lot of new enterprises, is where you can combine outside industry expertise with insider expertise. That's where real innovation comes from. And so we had that team put together before we went out and started asking people for money. But the money came from a really wide spectrum. We had, there's probably the vast majority of the people on that list, I would say roughly 200 or so were writing checks of less than 50,000, and the vast majority of that were less than 10,000. So we had a couple of larger family offices or investment advisors that were pooling client money, that wrote checks of $1 million, $2 million at a time, but probably about a quarter of the dollars came from individual small everyday investors.
So when you talked with them, what were you riffing on?
You can tell we're a mutual because it's in the name, obviously, but not everyone knows what that means. And what a mutual is effectively a credit union, except it's a bank with FDIC insurance. So ultimately, we are owned by our depositors. And to me, that creates this incredible alignment from a strategic perspective because we work in their best interests. And so one level deeper, what the structure does is, ownership is not one thing. Ownership has component parts. So we're going to get a little technical for a second, but the pieces of ownership, one piece is liquidation rights, who gets the excess if the thing is sold. One piece is economic rights on a daily basis, who gets access to the profits. And then the third is governance, voting rights, who controls decision making. And usually that's in the form of who decides who's on the board. So the beauty of a mutual bank is it separates those into component parts. Whereas a share-owned company or a shareholder-owned bank, all of those rights are held by the same people and shareholders. In a mutual structure, the voting rights are held by our corporators, which is essentially a board of trustees. The economic rights are shared between we call them special deposit investors, but our investors and our depositors. And then the liquidation rights are broadly shared across all general depositors, but investors don't have any exposure to that. In other words, investors don't benefit if the bank changes ownership. And that's the crux of it, is if you remove the incentives for the investors and for the management team to sell the bank, that's the crux of the equation.
So what were people saying to you? Did you get, oh, that's a great idea? Oh, I don't know if I want to invest in this bank. It's too risky.
Definitely the full spectrum. I think it was helpful to have a pretty well-established history in the sector and a lot of relationships. And so I think whenever you're trying to build an early network around an idea like that, whether you're fundraising or not, it always helps to, start with one degree of separation. And I've probably learned that lesson a number of times, but when you go out further, you can burn a ton of time trying to convince someone that is too far outside of the sphere. So, for example, we talked to a lot of traditional bank investors. And those people definitely thought this was crazy.
They're like, who is this guy? I mean, no way is this going to work.
Yeah. Yeah. Whereas impact-oriented folks, I think, understood the vision of, hey, there's a core insight here that a bank can be an incredibly powerful mechanism to create change. And that's because they have a license from the government to obtain the lowest cost of capital of any type of entity, lower than the government itself. So, what the government pays on treasuries is typically much higher than what banks pay for deposits. And so the core idea to a lot of impact investors, I think, was compelling, which is if we can lower the overall cost of capital to this ecosystem by using a bank, that could unlock a lot of growth towards a more sustainable, vibrant, inclusive local food ecosystem.
I would love for you to talk about the beneficiaries, the loans that you're giving to small businesses, to farmers. And so talk about some of your favorite stories of where you've given loans and what's been the impact.
I came to believe that when we make choices about agriculture, energy, waste, or things that affect natural resources more broadly, and they are out of sight, out of mind, the negative consequences associated with those choices are borne by someone else, somewhere else. Where this all comes together is it's only fairly recently that I recognized that is also true of banking. And for almost everyone, banking is out of sight, out of mind. We don't wear our bank brand on our shirt sleeve. And so if we can create an ecosystem in which people are much more aware of where their dollars are going and how they're being utilized, that I think has really profound consequences for sort of change from an economic, environmental, and social perspective that are so important. So I'll give you a immediate example of that. One of our early loans was to a shellfish hatchery called Ark Shellfish Hatchery also on Cape Cod, coincidentally. And this is a business that produces seed stock for area shellfishermen. And they probably, I think the number is they support 1,500 individual independent businesses. And these are typically sole proprietor, individual people out there seeding oysters, clams of all different types. And there is something really beautiful about this business. Let me take 30 seconds to explain clam sex to you.
Okay, let's learn.
So they open an adult, not knowing if it's a male or a female, because you can't tell from the outside. This woman explained to me how you tickle the tissue, she said, and assuming it's a male, mm-hmm. The sperm comes out, and then you put it into buckets with other adults, one per bucket. And if it's a male, they also release more sperm. And if it's a female, they release their eggs. You basically just combine these buckets, and then voila, 5 days later, you have these tiny little grains of sand in the bucket, millions of shellfish. And it's crazy to me that this is how it works in the open ocean, is just the eggs and sperm combining. Anyway, this business is vitally important to that local ocean economy across the Cape and both directions, north and south from there. And I think they had struggled to find a lender that understood the nature of the business, because there's nothing but risk there. Because if the water temperature changes, if their ability to produce algae, which is what these things eat, something goes wrong in that system, all the clams starve and everything is ruined. And so they needed someone that would really understand the nature of those risks, how they were controlling for them. And we were really able to dig into the business and get them a working capital loan to support further growth in the business. And one of the most beautiful things about this business that struck me, and this is a little romantic, but I asked them, well, what do you use as breeding stock? And that's the point at which a traditional bank might say, do you own intellectual property around the seed stock? And or do you have contracts to make sure you have that seed stock in place? And instead, the answer was, we rely on the goodwill of our customers who are looking at shellfish, like hundreds of thousands of these things every day. They recognize when they see one that they really like a real specimen, and they bring it in. And we don't pay them for it. And it happens every single week. Someone comes to them and says, you guys have got to breed this. Look at how beautiful this clam is. And there's something very organic and just very, there's a resilience that I take from that in the relationships they have created with this community. But I think other people would look at that and say, wow, there's risk, because if that person doesn't show up, what are you going to do? But this business has been operating for 30 years. So anyway, that's a good example of, I think, a really impactful business in the region that sort of struggled to find the right banking relationship, just like I had in the past.
So you see risk differently, which is good. It's kind of an ethos of the bank. The other thing you talk about, and I see it in your materials, is you have a different view of relationships. You talk about your depositors as stewards. And you just told a story that was based not on contracts, but based on relationships. And that is, in a way, the newness of Walden reverts to the oldness of people having relationships and in commerce and ecosystems. Give us another story or two, because you have all these amazing cases on your website, and I want to share some more of them with our listeners.
Another one that comes to mind, I think this one's probably on our website too. At some point, a guy by the name of Carl King approached us, and he was a retired state police officer. He had grown up in Vermont, and the property that he had grown up on had come up for sale. No farming experience. But although when he was a kid, he was around animals and, obviously living on this property. But he had already cobbled together all of these pieces and basically, made a deal for this property, even though he didn't have enough money to get it done, and created, he got seller financing from the person selling the property. And this property had previously been in his family for, multiple generations. He, alongside it, was also buying this existing business called Vermont Natural Beef that was going to allow him to have a sales outlet. And he had a good vision for how to scale that business and putting marketing dollars behind it. We gave him a loan to purchase the property, and there was something that was pretty palpable around Carl's passion for the project and the family history from the property. I wouldn't say these were things we considered from an underwriting perspective, literally in the credit memo. But I think when you've got a lender out there talking with someone that has that kind of history, like, there was clearly a character here that was going to do no matter what they had to do to make this work, because it was their family farm and they were never going to have a shot to go back there again. And so that was, I think, in the back of everyone's mind of believing that Carl was going to go out and do what he said he was going to do because of that dynamic. So, and of course, just to be clear, we're still looking for things that protect the bank and protect our depositors. And so we had adequate collateral in place. We believed in the business plan and the cash flow's ability to support the debt. And so I don't mean to suggest that we're so relationship driven that we could just ignore that kind of stuff. But there was something really compelling about that story that, I think we all believed in, and it's borne out. I mean, that was, I think we made that loan almost a year ago, and he's done really well with it. So that's been a really inspiring story to watch.
That's a beautiful story. And I love the fact that you are accounting for someone's passion and vision, in addition to, being thoughtful about collateral and things like that. And I know that you're very proud that you have in your team, you have bankers, but you also have people that know the local economy, they know agriculture, they know farming. So there's a connection that you've created in the structure of the bank so that you can appropriately assess risk and the people that you're investing in. So that's really wonderful. How many loans to date have you made since you started? And also, what's the complexion of the individuals who you've made those loans to? Meaning men, women, types of businesses, things like that.
I think we've probably made somewhere around 85 individual loans since we opened. And those range from $50,000 on the low side to we've originated stuff well over $4 or $5 million in combination of we'll bring other banks and partners to, it's called participate on a portion of the loan when it's larger than we're able to do ourselves. I'm proud to say actually the majority of our loans have gone to women-owned businesses. I think the percentage of loans going to small business, small farms, women owners, BIPOC owners those numbers are like multiples of what you would see at a traditional bank. I'd love to see us continue to serve more underrepresented borrowers. One of the challenges there, at least on the ag side of the equation, is just in the Northeast, there just are not a lot of BIPOC farmers. And that's sort of part of the problem is we have this resurgence of young and beginning farmers in the region, but they're definitely disproportionately white. So we have work to do there.
Okay. How about with depositors? How much education are you sharing with them in terms of your communications about when you deposit? Again, where you bank matters. Is it a hard sell to your depositors? Do you have people just flocking to you?
We've tried a few different variants of how to explain what we do to people, but one of the starting points is to sort of enlighten folks that actually where you bank really does matter. And you sort of started with that premise, but there's been some interesting research done that demonstrates $125,000 in a bank account with one of the top 3 banks in this country is equivalent to the carbon impact of the average American for an entire year. Driving, flying, eating, everything is just your money sitting there in an account. And it's a bit of an odd comparison because that's obviously far above what most people have in a bank account. But that's sort of irrelevant to the point, which is that money sitting there is actually one of the most consequential choices you make from an impact perspective, far more so than food, clothing, cleaning products, all the things that people are generally very thoughtful about. But you cut that number in half, and that's still a multiple of the impact that a lot of those other choices have. So that helps to start the conversation.
It's amazing. I mean, I know I've been in this field for decades, and oh my God, buy sustainably sourced food and recycle everything. And, I drive an electric car, and it's like, OMG, this is like a way I could really lower my impact. So
totally. And it's what underlies everything else.
I love it. So I want to ask, can you share with our listeners your long-term vision for the bank? Because first of all, you don't have really short-termism, because you're investing in farming and regenerative agriculture and all sorts of things like that. But you do have a very discreet, and you say it on your website, your long-term vision.
We're trying to develop a truly functional ecosystem, and we want to serve that ecosystem by connecting borrowers and depositors in increasingly interesting and impactful ways. And so the way that we are sort of piloting that in our early days here is through a really simple partner perks program. You get discounts when you use your debit card at our borrower businesses as a way of reinforcing the impact that those businesses are having on the greater community. We have a summer farm dividend that allows our depositors to spend a dividend in a farmer's market or a local food vendor. And we'd love to continue to grow that program over time. I think our longer term vision has to come with that caveat of we're doing this brick by brick. And my ethos is the business model is to do right by our community, and maybe you do end up changing the world, but you might do it by inspiring others to do right by their communities as much as, growing the enterprise itself.
And so I just read that you have 100-year CD. Is that part of the bringing that long-termism to life?
Yes, that has several purposes. One is to communicate that, yes, in fact, we do intend to be here in 100 years, but it also has a few other purposes. One is that to a small farm that has a increasingly small margin profile, the difference from an affordability perspective between a 20-year mortgage and a 40-year mortgage is the difference between making it work and not. And banks struggle to make really long-term mortgages. That's often what gets banks into trouble, is because when interest rates swing one way or another, when you have these very long-term assets, that can create real problems and creates risk for the bank. However, if you have long-term capital to fund those loans, that solves the problem. And so that was part of the impetus of the 100-year CD.
Nice. That's very good. So just a question. Do you take depositors outside of New England?
Great question. Yes, we do. We have depositors from 44 states now. We are about to open. You can get an account in California. That was one we are just now adding. But we're focused on the Northeast just because that's the ecosystem we're really oriented around. But we do welcome deposits from anywhere in the country.
Okay. Well, I think you're going to get some deposits from Florida, which is where I live. So, okay. We have to get this story out even more. Has anybody in the banking industry taken notice, like maybe I want to do something, or another social entrepreneur that I want to do something like this?
So there's this amazing thing in the banking industry. On one hand, as someone coming from the outside into the industry, it's a very odd place. The banking is very insular, and technologies that are commonplace and cultural practices that are commonplace outside of the industry tend to come slowly to banking. And so that's been a little bit of an adjustment. On the other hand, I have found other bank CEOs to be incredibly welcoming and supportive and collaborative, and sort of have this attitude of we're all Davids amongst a couple of Goliaths. And so the market's plenty big for all of us. And so I've had many bank CEOs send us various policies as a template for what we were working on, even entire business plans. And so people were very welcoming from that perspective. Even more so, though, there's this group of bankers that are trying to plan the next generation of mutual banks. And so we very much started to get that group of legacy mutual banks to think a little bit differently, because it's been in need of a redefinition in the modern era for a while now.
That is great. This has been a wonderful conversation. I always give the last comment to my guest. And what I'd love to do is, I'd love to have you back on the show in like a year.
I'd love to come back.
So to talk about your progress, which would be great.
Sure. I'd love to come back and tell you where we're at.
Because you're going to be a new hero. So how would you like to end this, at least this first conversation? We'll have another one in the future, but for our listeners who, gosh, there's so many people out there, that one, they'll be admired. Two, they might want a loan. Three, they might want to be a depositor, or they just want to cheer you on. But what's your final words?
Well, I hope people come away with the conclusion that where they bank really does matter. And relatedly, the reason I think that is important is because banking is part of an ecosystem in the same way that agriculture, energy, and waste are. And I think we all would like to agree, we'd all like to avoid the Hunger Games scenario where the rural sectors toil on behalf of the urban elite and increasingly speak a different language and get their news in different places. And there are really quite consequential implications of that. This is not about food miles, though. That's not why a local food ecosystem is important. It's when it comes to issues of natural resources, it's not a system of inputs and outputs. These are cycles. It's the physics law of conservation of mass. You can't destroy these things and you can't create them. You can only transform them. And for a long, long time, we've thought about waste and energy and agriculture as systems of inputs and outputs. And that's not what they are. They're cycles. Banking is the same thing. Banking can't be about inputs and outputs. It has to be about creating a functional ecosystem and cycle that reinforces rather than detracts from community. So I hope that resonates with people and would love to have them open an account with us.
That would be great. So I'm going to encourage all of our listeners to open an account with Walden Mutual Bank. I'm going to do it.
I hope you do. I
will absolutely do that. And we will have you back in about a year so you can tell some more great stories about your depositors and about your borrowers and about your impact. So it has been a delight to talk with you, Charley.
Likewise, Carol. It was fun. Thank you so very much for having me.
This podcast was brought to you by some amazing people, and I'd love to thank them. Ann Hundertmark and Kristen Kenny at Carol Cone on Purpose, Pete Wright and Andy Nelson, our crack production team at True Story FM, and you, our listener. Please rate and rank us, because we really want to be as high as possible as one of the top business podcasts available, so that we can continue exploring together the importance and the activation of authentic purpose. Thanks so much for listening.